the taxation of Bitcoin. In this video, I'm going to go through the taxation implications of selling Bitcoin. At the end of the video, I'm also going to talk about how you can find out more about Bitcoin. I think it's an important asset category. It's quite big now. It's as big as a major company, and it's as big as most foreign exchange, most different currencies. So I'm going to talk about Bitcoin, but if you want to be kept in touch with future videos, do weekly videos on tax and accounting, so please subscribe. It would be very welcome to join us. And if you press the like button, it really helps me get the video across. So the taxation of Bitcoin. For most Bitcoiners, they believe that Bitcoin is digital gold, or that it's digital money, but that's just not how HMRC, the taxman, sees it. With gold or with money, when you dispose of it, generally there's no taxation. But with Bitcoin there is, and in most cases it's treated for capital gains tax. Now it's like the disposal of an investment. Now if you trade, it's possible perhaps to have it as trading income and be subject to income tax, but generally it is subject to capital gains tax. Now the way that capital gains tax works is that if you have an investment, even if you bought the investment over a period of time, you take the average cost of the number of Bitcoin or the number of shares that you bought. So you take the average cost, you set that against the sale price, any costs incurred in buying and selling it, and that gives you a profit. That profit is subject to capital gains tax, and the first 12,300 in the 2020-21 tax year is not taxed, so you get an allowance, and then after that it's taxed at either 10 or 20%. So let's look at the allowance. The allowance is a separate allowance to your income tax allowance, so you get two allowances, one for income tax and one for capital gains tax. And then the rate of the tax in the 2020-21 year is 10 or 20% for investments. Now that may change. There is rumours that they want to increase it, but I can't get into the heads of what the Chancellor might announce. All I can look at is what the rules are now. And if you're a basic rate taxpayer, then it's 10%, and if you're a higher rate taxpayer, it's a 20%. And if you're sort of close to the limit and the amount of the gain takes you over, you'll pay some at 10% and some at 20%. If you transfer assets, so if you're in a partnership, you're either a civil partner or you're married, and you give or sell shares to your partner, then they inherit your history on cost. So you're sort of counted as one being, but it does mean that you both get a personal allowance for capital gains tax every year. The year for capital gains tax is the normal tax year, so it's 5th of April or 6th of April through to the 5th of April. So it's a normal tax year. So if you sold something on the 4th of April and then on the 7th of April, you get two allowances, one in each of the different tax years. So in terms of, when you sell Bitcoin, it's likely that you're not selling your whole holding. I think for a lot of people, they'll just sell a portion of it, they'll sell part of it. And there are some peculiar rules about pooling. So if you've bought your Bitcoin over a period of time, let's say it was all bought a year ago, then the cost is pooled, and you take the average cost when you bought it to match against the sale proceeds. So that's relatively simple. But there are two other complications. Any purchases and sales in the same day are netted off against each other. So you don't go to the pool if you buy and sell on the same day, they count together. And if you sell today and then buy in the future, in the next month, that is also netted off against the price now, and that's an anti-avoidance thing. What they don't want is you to what they call bed and breakfast. But so it's an anti-avoidance thing. So if you sell it now, then and repurchase within the next month, that repurchase counts as the cost. And those are the main Those are the main complications. And that's how capital gains tax works for Bitcoin. It's like an investment and it's subject to capital gains tax. So why should you be interested in Bitcoin? Well, the whole cryptocurrency market is now, I think it might be approaching or just over or just under $1 trillion. So $1 trillion is $1 million. It's a huge amount of money, a huge amount of value. So it is becoming more mainstream. It's still a bit nichey and it's still maybe a little bit geeky, but it is becoming more mainstream. And it has, over 2020 certainly, it became much more mainstream, I would have said. So if you want to learn about it, I mean, I think one of the ways to learn is to do. So a lot of people like to learn by doing. So if you invest a trivial amount, you know, a few £100, something that you've just got and it doesn't matter to you, there are lots of cryptocurrency exchanges. So if you just put your money into those, work out how to open them, and then buy and sell, you'll be able to work out how it works. And I think that is, for people who like to just do, that is a good gateway into educating yourself. There are books, of course. The books that I enjoyed or read and have learnt a lot from, there are two that I would like to recommend. There's one called Why Buy Bitcoin, and that goes through the pros and the cons. It goes through all the sort of the things that people worry about about cryptocurrency and Bitcoin in particular. But it's good because it goes through in a lot of depth, but it does it in a very simple and easy to understand. So the person who wrote it must have understood it really well, because he can explain complicated things in a very simple way. It's 170 pages, and they're not difficult pages, so it is really a really good way of getting to understand the whole thing. The other book that I've read is The Bitcoin Standard. That's probably twice as long. It's 270 pages, but the words are a little bit smaller, and that takes you through sort of why you might want cryptocurrency. So it really debunks the current sort of mainstream economic thought, and it really doesn't like it. It really doesn't like it. It doesn't really like the current institutions, and it goes through why they are corrupting and warmongering, and goes through that in some detail. So it sets it into an academic framework and then talks about Bitcoin, which can sort out those problems. So it's a bit more trickier, but it sets it into a more academic framework. But I think it is a really good, probably the most common thing for people to look at then is podcasts and videos. There's an awful lot out there. There's an awful lot written by millennials and Generation Z. Well, I don't really like that sort of stuff because kids talking about technology just sort of blow my head. I like older people like me to talk about tech because I sort of get them, and they talk about it in the way that I can understand. People that I think that you might want to have a look at is somebody called Simon Dixon, who has founded Bank to the Future. He's based in the Isle of Man. He's of British origin, and he's got some really good thoughts. He's been in the crypto space and crypto understanding and investing in it for many years. There's somebody called Raoul Paul, who is part of Real Vision. Real Vision have a crypto videos. They're a video like the BBC for finance, so he has a great interest in Bitcoin. So there's a lot of information on Real Vision. The other person that, if you want just like a hard-hitting, opinionated New York thing, then if you look at Max Kaiser, then he has a lot of stuff on it as well, and he's very direct about it. I think there's a lot of videos then by a guy called Michael Saylor. So if you look up his name, there's a lot of content that he's done. Now he's the chief executive of a company called MicroStrategies, and they've put all of their excess cash into Bitcoin. It's very, very well timed because it's tripled in value. But he has some very thoughtful interviews, and he's very each one of them is very different, and it's I think he does it very nicely. If you want the opposite view, there's people like Peter Schiff, who just think that it's all a scam and it'll go down to zero. So if you want to see the other side of the argument, balancing it with people like that can be very useful. I think that the tax seems quite unfair to treat it as a capital gain, but as a capital gain it is treated. So be aware of that, and the pooling rules and the way that the transactions are matched. You need to have some care when you look at those, and then you need to have some care when you look at those. So, but I do think it's a really important asset category, and to complete your financial education, I would recommend that you learn about it. I do weekly videos, so if you'd like to be kept informed about accounting and tax issues, then please subscribe to the channel. If you press the like button, it really helps the channel. And if you've got comments, then you know where we are. If you've got thoughts, you know where we are. You can find us. I will share my thoughts with you. And if you want to put public comments on, please do so. Again, it helps the channel. Thank you.